Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie_all caps on Twitter, founder of Voyage Trading Group. Today is November 18th, 2022, and we'll be doing a market recap of the week we just had and try and read the story that the market is telling us as of today and what we can expect going into next week. So the first thing we're going to do is we're going to take a look at the NASDAQ on a weekly time frame and see what this week's candle is telling us. Okay, the two moving averages we'll use is the orange 10-week moving average and the blue 30-week moving average. And we can see the bull market trends the 10-week moving average using the 30-week as support as we make higher highs, and the opposite for the bear market. We are trending down on the 10-week and using the 30-week as the resistance here. And so it is constructive that we are now using the 10-week as support here. This is a fairly bearish candle. So next week will be interesting to see what happens, but we are now using this 10-week moving average as support, referring to this weekly candle. You could say that we rejected the 10 weeks. So it is possible that we kind of chop around in this zone. If we look at the daily, we are definitely been in this choppy zone here. I mean, this choppy zone here. However, we are using the 50-day as a level of support and a 8 EMA as a level of support. The 50-day isn't quite flat yet. It is starting to, it is still slightly bent down it is still slightly pointing down. If this can level out and then eventually curl up in the coming weeks, it will act as a stronger support. As you can see here, when we had this rally here, the 50-day started to curl up, which makes the moving averages much stronger. The SPY did close up a bit better than the NASDAQ did. And so the NASDAQ currently is the lagging index. However, what we're really more concerned about is sector strength, institutional support, and getting some breakouts that are moving higher and trending higher. And so before we get into individual names, let's just take a look at value versus growth. Okay, here we have two ETFs. The blue represents the SPY value and the orange represents the SPY growth. And you can see year to date, value is significantly outperforming growth. Value is down only 6% this year, and growth is down 27% this year. So if you are a growth investor and you are down and you're trying to figure out why you can't make any progress, it's because growth is significantly down. And if you are only trading growth names, then there is an illustration here, technical breakdown of exactly how poor growth names are doing. And so if we zoom in a little bit, the story does change a little bit. If we zoom in to a 1 month, growth is starting to curl up here. And if you go 5 days, that the margin between growth and value is getting closer and closer. If we look at 5-year, you see that growth has outperformed value, 63 to 33. Okay, here's the VIX. The VIX is below my threshold of 25. I like to see it under 25 and closer to 20. However, this doesn't necessarily mean that breakouts are going to work. However, it is saying that the volatility intraday is much lower than it has been. So we definitely need to be paying attention to how stocks are trading and not just pay attention to the VIX. This is just a indicator that allows you to make a better judgment, to have more probability on your side, more wind on your sails when deciding to invest in breakouts and try to trade on the long side in the bear market. Still very difficult, as you can tell. The past few weeks have been very difficult. Months have been very difficult to trade. But definitely between when the VIX is in the 30s and when the VIX is in the low 20s, the environment is much different. There has been a huge improvement in the number of stocks above the 50-day moving average. We are right under 67%, and I like to see 70%. But this is a huge indication that the low is in on most stocks. And now we're just waiting for, the larger economic data and for the indices to kind of moving averages to flatten out and to start to curl up. But this is a huge sign that trying to trade individual names, of course, you have names like Apple and Amazon that are still making lows, but there are a greater percentage of stocks, 60, almost 70% of stocks that are trading above their 50-day moving average, which means that they are nowhere near their lows. And so that's a really great sign. We can see gold had a huge bounce here off of this resistance at 150 and are trending much higher, 160. So this is something I want to pay attention to. This definitely has to do with recession and has to do with interest rates and things of that nature. So this is definitely going to be something that I'm watching to see how gold acts. I do also like to pay attention to how biotech is performing. I'll throw some moving averages on here. Not those. So we can see that we are trending very nicely in the biotech ETF, and we are trending up this 8 EMA. So this is something really interesting to watch. We want to start to see some big volume coming in here, maybe even a test of the 21-day moving average. But for now, biotech is a leading sector, and so when looking for leaders, biotech is a sector that I would spend some time looking at. I find the semiconductor ETF SMH to be a huge indicator of the overall health of the market. Names like Nvidia and AMD, huge liquid leaders, and so when they're performing well, generally speaking, the market is performing well, and we can see that we rejected the 200-day moving average here. However, we did bounce. Very nice strong bounce off the 8 EMA here. So we're just expecting some chop around here. And really, I'm not seeing any tight price action. I'm not seeing any trending. So this is a bit concerning. Here we have XLE. This has been the leading sector year to date. It's been an unbelievable trade. If you are trading any energy names, that's really the only names that have been working all year. We did kind of reject this 93 area, but we are being held up on the 21 EMA here. And so we need to see how this is going to play out in these levels. If it rejects lower to the downside, that could be bad for the overall market, but it's just something that we need to pay attention to. Okay, now I want to get into some individual names. We can see GFF. This is a focus list that I have been watching. Nice tight price action, got really tight here, had this shakeout, and then today we had a big breakout on volume due to earnings. Is 219% above average volume, closing on the top of the range. So this is a name definitely to have on your watch list. When it pulls back, then you can have a better risk to reward opportunity. I'm going to show you the next couple examples of exactly what I'm talking about. You put names that are breaking out on your watch list, but you buy them on the pullback, and this is what I'm talking about. So here we have STNG, and you can see it broke out, it retested. If you bought the retest, you could have made money on this nice pop here. It retested again, and if you bought it, it's moving out once again. So this is, again, what I'm talking about. You want to put names that are breaking out in your watch list, set an alert for that level, and then if you buy it, you have a really good chance of knowing whether it's going to work right away or not, because if it falls below the level, you know it's failed, it gets stopped out. Here's another leader, ELF. It had the highest volume ever, 305% on earnings. on, let's see, November 3rd, and it's been riding that 8 EMA ever since. I'm waiting for a significant pullback, but this is a leader for sure. And this is what you want to be paying attention to during the bear market. PI is another name. I've been trying to trade this, and it's been very difficult. However, it is consolidating here. And so if we can get a couple inside days here, I'd be interested in buying this name again. You cannot deny 619% volume, highest volume ever on this big peg, which is post earnings gap. And so once it moves out of here, I can see this name trending very nicely. Guild is another one, highest volume ever on earnings October 27th, and it's broken out from that high of the peg, and now it's trending the 8 EMA. And again, when this name settles a little bit, I will love to invest some money in that name. Two more, INSW breaks out, trending very nice, has a shakeout, getting tight here. So this is a name I'm watching for. We want to see a nice surge of volume, taking it into new highs. ENPH, great example. Not everything is working right now. We had a breakout attempt here, and it did not work. It came right back down. I bought this name today at the open. Let's see. So I bought it here. I took a little bit of profit here, and then it started to come down, and I broke even. I took just a small target there, but I did not let it turn into a red trade. But this is the environment we are trading in. Huge volume through the pivot. You can see this volume surge here. You're thinking, oh my God, this is beautiful. 10-minute range breakout here, goes up, and then it comes right back down. So you have to be very quick. This is only 20 minutes here. So if you buy the breakout and then go walk away, you are probably going to be hurting, because this is a very fast market. And if you're not fast, then you're getting your stops rated. And so this is just a simple fact of what kind of environment we're in. We have this sort of breakout, but then somehow we also have this sort of breakout. So it's very hard to find leaders, and it's not hard to find leaders, but it's hard to buy leaders and hold on to leaders, because you never know what you're going to get. You never know if you're going to get a move like this, or if you're going to get a move like this. If you here's the end phase peg here. It trends up a couple days, and then it comes right back down, and then bounces back up. It's just exhausting. Here's the other one from the July earnings. Had this big gap up, another big gap up. You would buy this here, stop here, okay, and then trending, test 21, trending, shake out. At this point, you would probably set your stop here. And then most likely you would have got taken out. And then 2 days later, huge recovery. And it's just a mess. And so, we need to just be very careful when trying to buy breakouts in the bear market. That's it. That's all I got. Thank you, guys. If you are interested in following me on Twitter, it's at Ollie_ on Twitter, and come on over to the Discord. I have a free section, and I have a paid $25 a month. No big deal. And I give real-time market updates, exclusive education videos. I do one-on-one coaching, one-on-one mentoring. Only ask is $25 a month. Nightly focus list. I'm updating all day long conditions of the market, setting alerts, giving buy signals. So it's a lot of fun, a lot of education. So if you're interested in learning and staying safe and protecting the downside, come on over to the Discord. Okay, peace.